How does Edge present itself in the commodities markets?
What I might say is going to be surprising. It's a lot about relationships. A lot of the intel that you get is through the relationships that you have with others in the industry. Are there market inefficiencies? Yes. Is that where you can make a lot of money? Yes. Are technologies and AI closing the gap on some of those inefficiencies in the marketplace? Absolutely. But do I think that those will completely erode? No.
This week on the podcast, I have Kristine Engman. She's a commodities trader, and for over 20 years, she worked at Cargill, one of America's largest agriculture conglomerates. What are the periods of time where commodities traders perform really well?
We used to say that we performed the best when the equities markets were performing the worst. Weather forecasts and then what actually happens in weather is a major driver for the energy commodities. Something as simple as it's forecasted to be sunny and hot in Southern California, and then all of a sudden a pop-up storm comes in and kills the demand 20%. That majorly changes the price associated with that area at that point in time for energy. That's also what makes commodity trading really fun and challenging.
Kristine, thanks so much for doing this. How does Edge present itself in the commodities markets?
Starting off with a big question, I see, Ethan. Edge, I think it's probably the number one question that a lot of traders get is, what's your edge? How do you create an edge, especially now? And tomorrow, arguably, is going to be even harder than it is today. And what I might say is going to be surprising. I think, especially in commodities, it's a lot about relationships, not just in the physical world of trading commodities, but even if you're a financial trader and you utilize brokers. A lot of the intel that you get is through the relationships that you have with others in the industry, because oftentimes those are the pieces of information that aren't readily accessible to the rest of the marketplace that can help give you an edge, especially when you might be seeing things that are happening in the markets that aren't explained. Those are oftentimes where you can get some of those real-time edges is through the relationships that you have, and also in building positions. In the physical world of commodities, having good relationships with market participants allows you to build large positions, both short-term and in the deferred markets that you otherwise wouldn't be able to, because you've got a level of trust with those market participants. And so my first answer that comes to my head is actually nothing to do with how you trade, but more the relationships that you have. The other thing I think just in general that maybe doesn't get acknowledged enough is access to capital, and how well capitalized that you are. If you are trading for a large firm with a lot of capital, you can definitely weather some of the storms that might come your way if their position's in your face than others. And then the last thing I would just say, and it sort of goes along with relationships, but not needing to have relationships for this one, is access to information. And I think it's a lot easier now for others to get information, but maybe what gives people an edge is the way that they utilize that information. So oftentimes, where I've had some of my biggest trades, it's come from paying attention to things that are happening in the market that maybe aren't getting the biggest headlines, the things that aren't getting talked about by everyone in the industry, because arguably those things are already priced in because everybody's talking about it. So it's what other things maybe aren't getting that headline, but either have, historically made a big move in the market, or, might be at the precipice of changing the marketplace. That might be a leading indicator that you can put on a larger position and get a big win. So I would say first and foremost, relationships, which is probably odd. Second of all, access to capital so you can weather some of the storms, and also, maybe put larger positions on. And, third being access to information, especially the kind that isn't getting talked about so much in the market.
Yeah, I want to deconstruct, I guess, the third piece of that, the information side. Because when I was doing research about commodities, I I wouldn't say I was like really interested, but I sent out a couple applications, I think in my final year of undergrad, to the commodities trading firms. Like I remember I was in the Glencore process for a little bit. And one of the things that I found really interesting I think it was just one traffic guru document that everyone's supposed to read. One of the things I found the most interesting was, given that, these are commodities, uh, you can trade on insider information in a way that you can't for stocks. So let's say you have, let's say at Cargill, what's happening in the supply chain. And obviously, since, that's owned by Cargill, that's information that only you have that others don't. And I was wondering, do you think that leads to more efficiency or more inefficiency in the markets? Because on one end, everyone is able to price in different things, and you're all working with, I guess, good source of information, at the top commodities trading firms. But at the same time, if you're the only ones with access to that, I don't know. I'd love to see how you think about that.
I think in general, the markets are becoming more and more efficient. So um, I don't know if different companies having different information about what's going on in the supply chains makes the market, I guess in some ways, arguably you could say it's a little less efficient. It definitely gives individual companies edges in different ways because you're naturally going to, especially if you're a larger company, you're naturally going to try to take what you're seeing and then, think about how that plays out in the broader marketplace based on what your size is in the marketplace. So if you're a, 40%, of the total marketplace, you probably have a very good idea of what's going on versus like if you're a player that's 5%. So, yeah, I mean, are there market inefficiencies? Yes. Is that where, especially in the physical commodity trading world, you can make a lot of money? Yes. Um, are technologies and AI, frankly, closing the gap on some of those inefficiencies in the marketplace? Absolutely. But do I think that those will completely erode? No. And so, again, I think it's more about um, utilizing some of that information that whether you have it internally on, how your plant is operating or what you're seeing for changing consumer trends, which frankly has been a big driver in how food demand has completely changed. Demand for commodities, biofuel demand and policy has completely changed how the demand for commodities looks. All of the tariffs that are going on in the U.S. and across the world change how commodities flow, and that all impacts how you trade, how you position, how you risk manage. So, yes, there's a lot of inefficiencies in the commodity space, but that also brings a lot of opportunities to those traders that understand the marketplace and can best position themselves for uh, those those disruptions and inefficiencies.
Wonderful. I guess I have a question now about, it's related to information, but it's really more a question about the different ways that firms trade commodities. Because, you know, we have the big commodities shops, the ones that have been around a long time that have, and historically been physical commodities trading firms. And now they do both physical and, just trading financial derivatives. And on the other side, I think more recently, a lot of hedge funds have gotten into the space because there is so much liquidity and opportunity. I mean, I think most of Citadel's gains in 2022 came from the commodities trading book, not from their equities book. And so I am curious about that. In your view, what are the differences in the way that these two types of different players trade? Because I guess fundamentally, the way they've been brought up and the way they built up the commodities trading books are very, very different.
Yeah, this is a good question. And I like this question a lot because my background started in energy trading. And there was a lot more big investment banks in the energy trading world in the 2000s and 2010s. And so my early trading, I was very exposed to um, how those types of market participants can influence markets. They have large access to capital. They don't care necessarily as much about the physical S&Ds um, as do what I would call traditional market participants. What's interesting about a lot of the investment banks is post-Dodd-Frank, a lot of them divested from their physical books and went more financial. And now, as you noted, are major participants not only in the energy space but also in the agriculture um, commodity trading space, where the traditional, I mean, ABCD companies, primarily egg giants, um, most of their edge and trading, both physical and financial, has come from their in-house S&Ds. And so they're much more fundamental in nature on how they think about trading. They're oftentimes playing against a delivery market, which essentially is when the physical and financial um, worlds reconcile against each other. And so that's how the different market participants play. Both can have, large gains or losses in the way that they think about markets, but it's very different. And the energy majors now are large participants in the agriculture space where they hadn't been before, and they often take much bigger, longer term positions to hedge out their production, as an example. Um, and then you've still got the traditional producers, like agriculture producers, eternal optimists, most of them. So they always think that the price is going to go up. And then you usually have, a big rush to sell as the crops come closer to harvest. And then you have the consumer companies who also have major risk in the world of commodities. And they're interesting because some of them are very much fixed on a budget. And so they might be managing the way that they manage their risk towards a budget. They might simply be trying to beat the prior year, which is very difficult in inflationary environments. And so they have to take on more risk than they otherwise would in an inverted market. So you do have a lot of different market participants, and maybe traditional versus some of the newer ones. And I think the best traders understand those different market participants and can sort of see through when some of the bigger market moves may be happening not due to a change in fundamentals or a change in policy or sentiment, but maybe it's just a big investment bank trying to put on a book, or because they just got off a meeting or with their shareholders and they've decided that they're going to place, they're going to shift their portfolio heavier commodities, right? There's a lot of reasons why you might see different market participants interact with the market. And so I think some of the best traders understand those motivations and can sift through when this is a big shift in the way that the market is behaving, or if this is just a little bit transitory and maybe a non-traditional market player putting on a book.
Wonderful. One of the things that fascinates me about the commodities trading space, we talked about those two different types of players, but it's the conditions wherein commodities traders will perform extremely well. Because in equities, in the crypto markets, it's pretty obvious when those will perform well. It's when interest rates are low, there's a lot of optimism, and you buy QQQ, you buy the Nasdaq, or you buy any of these cryptos, and they shoot up. This year, obviously, aside from the whole tariff thing at the start, where everyone was convinced Trump was going to crash the U.S. markets. Barring that, if you had just bought and hold the market, you would have done great. But I look at a period like 2022, and we saw equity markets getting hammered. We saw the Nasdaq down huge, like down big. But I remember reading these articles about energy traders at Trafigura just raking in huge sums of money, and I couldn't believe it because to me, I was in high school at the time, and it like it didn't make any sense. I was high school or summer university, but during that period, like I just couldn't understand how during so much uncertainty, these guys were making huge sums of money. So I want to hear it from you. What are the periods of time where commodities traders, and I know there's various different types of commodities, so you can elaborate on that too, but what are the periods when they perform really well?
Yeah. Well, we used to say that we performed the best when the equities markets were performing the worst. So I think your feeling about 2022 is probably spot on. Um, I think maybe then you already recognize that number one, commodities are going to become a safe haven for investors that are trying to exit, you know, maybe other types of investment portfolios. So right there, you sort of park that and you're always going to have this churn of investment right now in the commodity space coming from people looking for a different way to invest their money, especially if the financial markets are not performing. And when you have that known, it makes it a lot easier to just trade either fundamentals or whatever your edge or style of trading is, because you don't have the unknown of that other big investor that we just talked about, which seems so simple, but in a lot of ways, that's what it is. I also think it makes it a lot easier to really pay attention to what happens in the markets when you get a headline risk, which actually we haven't even really talked about, but that's something that the advent of social media and the impact that it has on market moves now that we didn't have social media a decade ago, X and things of that nature, that, you can have a tweet from a president and the markets move, 5%. But I think back to your question, you know, we i the commodities market doesn't stop, and you don't have the ability to decide to be in or not if you're a commodities trader at least at one of the big ABCDs, because you often are also managing a physical portfolio that requires daily management. And so I think when you get some of those other market players out of the way, in some ways, or you at least know what their behavior is going to be, it allows you to really shine as some of the majors in the commodity trading world.
Fascinating. And what you touched on there of the advent of social media and the risks that come with it. I mean, not just for commodities, but really for any financial product. Like I think I remember a tweet of Trump saying he was going to tariff to China. He wasn't even president, but he was going to like impose huge tariffs on China. And so the market in China priced in, the probability of Trump winning times the chance he does that. And I remember the like the index in China dropped. But I'd love to hear about that. And I think it's a great way for us to transition into, a conversation more about the way risk is managed within commodities. Because one of the things I remember is that, a lot of commodities trading firms rarely ever really trade the delta. They don't really trade the actual movement of the commodity. And correct me if I'm wrong on that. And so given that, like, how do these shocks impact traders? And to be honest, I guess my other question is, what are the types of risks that present themselves in commodities that someone who's interested in other products wouldn't exactly know about or understand?
Yeah. To touch on the tweets, whatnot, we deemed it headline risk because at the time we really didn't know what to do about it. And then at the end of the day, you have to assume most of that is fairly transitory in nature and just presents a very real time opportunity to maybe either add to a position you have or take some profits. Um, so it's interesting because, well, first of all, I wanted to touch on every one of the majors in agriculture commodities, I think, um, trades or manages their risk differently. I can say my background at Cargill, we very much traded the delta. So, not all shops do, but Cargill was and still is one that does trade the delta a lot. So that's probably a misconception. You had also mentioned that a lot of the other players come to commodities because of the liquidity. And on the financial markets, you're totally right. Most of the commodities have a high amount of liquidity in the financial markets. But one of the big differences, if you're managing physical commodity risk, is actually the lack of liquidity or the challenges that you have when you're managing the physical commodity. And if you have a plant shut down unexpectedly, and now you're long the physical commodity with nowhere to go, there's not very many options, and the market knows immediately that you are stuck with a physical long with no way to go or with nowhere to go, right? And so actually in the physical world, liquidity can be a major challenge and one of the biggest risks that you run. Another big risk that you run is forecast accuracy in physical commodities. So I'll give you an example. Let's say that I'm running all the corn milling facilities risk management, which I did for a few years. Okay. And so we expect that we're going to sell at one plant like 200,000 bushels equivalent of corn related products for a certain time period. So if I want to be delta neutral, going back to your delta example, I don't want to have a position long or short. I should just go buy 200,000 pounds equivalent and just be even. But the reality is that's a forecast that I have to operate under because I have to go and physically secure the corn from the farmer, right? I have to go out and get access to and have the physical corn priced and delivered to my facility so that we can put it through the processing plant and then make these products. Meanwhile, the sales organization at some point is going to sell the 200,000. But what if they don't? What if they were wrong, and let's say PepsiCo wants to only buy 150,000 pounds equivalent. But I already had the product to my plant. So now I'm 50,000 pounds long. Or conversely, now we sold more than we have product for. And so there is this element of like managing risk and forecast accuracy that you're constantly dealing with in the physical commodity trading world that is unlike anything that you see in some of the other asset classes. We talked about headline risk, but weather is probably the biggest and we all know how accurate weather forecasts can be. Um, if you live where I do in Minnesota, it's rained, about 80% of the days when I think our forecasts were for 20 this summer. It's been very rainy. But weather forecasts and then what actually happens in weather is a major driver for both the energy commodities, where I spent 10 years of my career. I lived through a polar vortex year in like 2012 or somewhere around there, where we had just this constant cold that was locked over the Northeast that created a lot of challenges. And I can tell you there was not a lot of liquidity in the markets during that time period. But something as simple as it's forecasted to be sunny and hot in Southern California, and then all of a sudden a pop-up storm comes in and kills the demand 20%. That majorly changes the price associated with that area at that point in time for energy. And then on the agriculture side, weather significantly impacts how we produce crops. And so the production estimates that you have are constantly changing based on changes in weather and forecasts. And we haven't even touched on transportation. Every time there is a hurricane and you might have a vessel that now has to get completely rerouted, and now your short product, for 30 days because it's stuck on a vessel that can't unload in New Orleans. There's a lot of challenges associated with weather and managing physical commodity risk. And that's also what makes commodity trading, especially if you're also involved in the physical space, really fun and challenging and more than maybe just the financial aspect, which is also there too.
From what you've said there, you know, I'm thinking in my head, if I'm managing a physical commodities book or even a commodities trading, let's say a physical book, there's so many things that you need to keep in the back of your mind of like what could go wrong. I mean, you mentioned weather, you mentioned transport. I'm sure there's so many other parts of the supply chain and not just of the product you're trading, but like, second order, things that could affect it in a second order way. And so I guess my question to you is how do you learn all those things and how do you what is your frame of mind for making sure that you're always aware of what could go wrong, what could happen here? And I guess even how do you learn that? Because, as far as I can tell, I guess for like if you compare it to other asset classes with equities, you have, macro and then things that are happening in the business, which I think are easier to understand than weather, supply chain, all these different things that could go wrong. I'd love to hear it from you.
Yeah. I don't want to say I'm a natural pessimist, but I mean, you do have to have a level of skepticism or awareness when you're managing physical commodity positions. We talked about forecast accuracy. Yeah, I got to decide if I truly want to be delta neutral, which I also have a saying that like you can't make money being even. So I don't know if you'd ever hear me say that I really wanted to be delta neutral. But if I wanted to be delta neutral, I would really be making an estimate on what percent of the forecast I felt like was actually going to happen. Right. So there's like this element. If I think back to when I was in university and I was a math major and I was in this probability and stats class and I was like, I don't understand when I'm ever going to use this. I could tell you in commodity trading you use it every day because I'm sitting there, challenging, okay, what is the likelihood of this forecast coming true? It's zero. We're never going to hit it on the head. So is this 95%? Do I think it's going to be over or under? Weather forecast. For me, my husband and I were actually talking about this last night. He's also a commodity trader, and I was thinking about what I might say today. And we were talking about weather. He's an energy trader, and it's more about like, okay, we've had three hotter weather runs in a row. Three, right? Let's just say out of all of model runs, which again, now there is more. It used to be just like the GFS and the Euro were the two big ones that you would pay attention to for weather model runs. And now there's like all these AI generated ones, which is just even more information to sift through. But if you're just paying attention to the same model because you think that one's the most accurate for what's been going on in the world, let's just say it's the GFS ensemble, and it's gotten hotter for the last three runs. What is the probability you're going to get another hot run versus a colder run this time? Because now you've had three hotter runs in a row. And then how is the market going to respond to that? I mean, those are some of the things, honestly, that are going through my mind. And a lot of it is ironically probability and stats, which I was sitting there going, I don't think I'm ever going to use this class. So I sort of went off on a tangent about that, but I think when you're managing like physical pipelines, yes, you're always wondering what can go wrong, or you have an element of risk management of like you do not want to be the one to shut the plant down, right? Like there's levels of risk that you can take, and you want to actually run as efficiently as possible, especially if you are dealing with inverted markets. And I've got stories about taking, massive losses on physical pipelines because you have to be priced in front of the plant. And if your market is in an inverse, you're just for every, pound or met ton of volume that you roll forward to the next month, you're automatically losing money. You're just automatically dragging product into a cheaper time period, right? And so you want to be like efficient and lean, but you can't be so lean that you run the plant out of product, because then you will have a loss on, all the sales and the margin that you would have made in the production. And so there is an element of like prioritizing, like, and really I would always say we need to just dollarize everything, right? So if I'm going to take $5 million of losses on this pipeline because you want me to price, and all of our consumer customers are really smart and they're just going to also drag on their contracts and wait because they know if they don't pull till September 1st, they're going to get a cheaper, product, then, you know, is that going to cost us more than 5 million? Or maybe we should make sure that we're actually running short, and that's the better financial decision for the company. So there's an element of understanding sort of like the financial implications of shutting down a plant, running a plant extra hard, how many different, if you're running multiple like products through the plant, what production schedule is most efficient for the way that you're managing your physical pipelines. There's just a lot that goes into it. And again, I'll go back to that's what makes commodities so fun and different.
For sure. It seems like, there's so many things to think about. And I would say it feels to me that there's a certain type of person that's hardwired for a business like commodities trading. Um, I don't know if you'd agree with that. I'm curious. And I guess my question now is, what makes an outstanding commodities trader?
I've been asked this question before. Um, I think my answer has been hunger, and I don't think that I'm going to change that answer. So at the end of the day, I think you need to be really hungry to be successful in how you're not only managing your physical positions, but like making money in the financial markets as well. And in order to be successful at doing those, you need to be willing to learn stuff every day. You need to be willing to look in the mirror when you're wrong and figure out how to do better next time. Um, you need to have really good relationships. We talked about that earlier, because not only, with you asked how you learn, like how do you learn how to, manage a physical commodities? How do you learn all these things? A lot of it is from others, right? So when we have, new fresh out of college, interns, or, first job out of college, or coming from a completely different space into the commodity trading world, you're learning by doing and from others. And so I think part of it is to just having the, humbleness to say like, I don't know these things, but I'm going to learn and do. And that's not for everyone. Right. And so if you don't have sort of that continuous learning, like internal drive to be like, oh, I'm going to be the best at this, or I want to learn more about this, or I'm going to, I see something going on over here and I think that I can really build a good position, or I really have an edge in the markets. Um, those are the types of things that I've seen make the best traders. I'll give you an example. Woman that came to work for me on my team in oils and had come from accounting. And yes, I have a soft spot for people that come from accounting because I actually ended up coming from accounting myself. But she came over, took, a big pivot in transition, because she had been well into her career in accounting and finance, and actually wanted to pivot and started as just a cash trader, and wanted to learn and worked her way up, and she's, managing a large oil desk now. But one of the big things she did and got lots of recognition in our company for was this cottonseed oil program from the US into Europe when they were looking for a sustainable solution. Um, and she did it all because she was super hungry for it, knew the players, had built a pipeline. I had challenged her to go and figure out how we could trade more cottonseed oil outside of like our program, and did it, and ended up making a lot of money, um, got a lot of accolades, built an entire new supply chain from scratch, all because she was hungry to do it. And that's in my opinion, what it takes. And then on the financial side, um, I have so many okay, I'll give you my example. I don't know if I said this on another podcast or not, but I was a mid-sea energy trader. So mid-Columbia, it's like northwest US, Columbia River in Washington. And um, I believed that there was so much snowpack that prices were not only going to get super cheap, that they were going to go negative because there was going to be so much production. There's a lot of hydro production up in the Northwest. And I had been doing all of this like analysis on like the amount of snowpack in like British Columbia and year over year and looking at maps from every different year at that point in time in like April and May and thinking there's no way that the system can handle all of this hydro production. And when the snow melts, they just have to at some point like open the floodgates and let it go, and it's going to generate all this electricity. And it's going to have so much supply, and the grid's not going to be able to handle it. The prices are going to go negative. And so I was selling super super cheap like power, and I was still selling it when it went to zero and negative. So I was essentially paying the market right to sell. And I remember getting hauled into a meeting room with a manager going like, "What are you doing? Like, you're selling negative power. That doesn't even make sense." And I'm like, "It's like, this is going to happen. We've never seen anything like it." And that's actually what happened. And the entire month of June that year cleared negative, because there was so much snowpack. But I don't think it would have happened had I not been like trying to find my edge, looking at, something that the rest of the market really wasn't talking about and building a position. And so I think my answer is pretty simple. It's hunger to continuously learn and build the edge, because you can have a bunch of different traders that have different ways of trading or methodologies or ways that they think, and they can all be successful, as long as they're, hungry and disciplined and willing to put the time and energy in.
When you talk about that story, or when you talk about trades being made, you know, when you have edge, whatnot, immediately what's coming to my mind is this idea of being contrarian. And I'm thinking of, in the tech world, we have Peter Thiel, who talks a lot about being contrarian. Um, I guess that's something that I'm really curious about within the commodities markets, because you have information that not everyone has access to, as we spoke about, towards the beginning of this conversation. Working at a private company, you can price that in, and it's not available to everyone. But at the same time, it feels to me that it's much more difficult to be contrarian within commodities, because there are other players who have information that you don't have, and that have information that's also incredibly valuable, versus, I would argue, equities, where it's easier to gauge what sort of information everyone has. Now, correct me if I'm wrong there. Um, I'd like to hear it from you. How important is being a contrarian in making money within the commodity space?
Yeah. It's a bit of a loaded question. I don't Okay, I've definitely spent my entire career being a little bit of the contrarian, and it's worked for me. But I don't think you necessarily have to be a contrarian to be successful. I think it goes back to that's what's been successful for me and has given me my edge. But I have seen very, very successful commodity traders that what I would consider more traditional, S&D type traders. Whereas I'm a little bit more of a contrarian in how I think. My example on hydro energy in that position was actually a, fundamental trade. I was just paying attention to something that maybe some of the market wasn't. But um most of my contrarian nature has been that I've been much more of a technical trader than most of my counterparts. Paying attention to charts and momentum and how the market participants are behaving and regression analysis and that type of thing. Again, maybe because my background is math, and so that was more of my comfort zone. So I've been a contrarian in that way. But I've seen very, very successful traders that are much more fundamental in nature. Again, I think it's, to me, more about figuring out what kind of trader you are and what works for you, and then sticking to that and not being all over the place with how you trade. Like, I'm going to be a fundamental trader one day and I'm going to be a tech trader the next day. And all of those things are important, and there's an element that's included in those in how everyone trades. But I think if you don't have your own style of trading, that's what trips people up, versus like really building up that style over time. So contrarian has worked for me. I don't think it works for everyone. I had a big contrarian trade a few years ago. It might have been in 2022 or around the time, and we had a very heavy oil S&D, very heavy. Meaning there was just too much supply. The demand for, maybe it was 20, the demand for all of oil going into energy for fuel, the ramp up wasn't going to be fast enough because they were physically building plants. And so it was looking to be just this super heavy S&D, and a lot of a lot of my counterparts had pretty big shorts on. But there was things going on in the world, specifically. This was right before the Ukraine war broke out, and the marketplace was starting to build in the risk of a potential war in Ukraine. And what was so interesting about that was just what that would do to the physical commodity supply chains, and the inability to supply the world with oil through some of the major ports and channels out of Europe. And so I took a very contrarian view, and we had a massive long. And in fact, we got extended limits. We're extended limit long, in December and January, going into that time period, and it turned out to be the right position. And I can tell you, I have a million wrong positions too. But contrarian has worked for me at times. But again, you know, S&Ds and having an edge there, and Cargill's been one of the biggest, and having a great edge in what they see in the marketplace because they're so big, and there's so many successful traders there that are more fundamental in nature, and super successful. So I don't think it's a one type. It's more just hunger, drive.
Hunger and drive. Yeah, you said something there about your massive long in 2022, during the start of the Russia-Ukraine war. Yeah, I guess this is a more like moral question, but do you ever feel, I don't know, bad if you profit from disaster in the world, or do you see that as part of your job? I'd love to get curious.
Yeah, that's a interesting thing. Look, I don't think anybody really thought that things were going to go the way that they have, and that the travesty that's been going on for the last several years was going to still be this way, continue, etc. I think the job of a commodity trader in any event is, first and foremost, if you have a role in the physical world, to make sure that you've got physical supply meeting physical demand, and making those supply chains work when there's disruptions, whatever the disruption. Did it happen that I also had a large financial position there? Yes. But there's been positions the wrong way too. At the end of the day, you have to have a position on that based on what you think's going to happen in the market. But I don't think it's necessarily much different than how you trade a hurricane, for example, and what that's going to do to the markets. Obviously, there is a horrible, tragic, loss that's going to happen for, people or places in different, major world events. And that's awful. But unfortunately, your role is going to be to position based on what information you're getting, regardless of the type of information. So, yeah, I mean, of course, I don't think you can fully take your emotions out of like what's going on. But I also think you have a responsibility in those crisis moments to try to make the best out of the situation because, we were also trying to figure out how to physically move product, how to physically keep our people safe during that time, right? We're not talking about all of those things that were also part of my mandate. We also all went through, the whole world went through COVID and what happened during those times. And did that mean that I could stop doing what we were doing trading? We actually had a massive long going into COVID and we got killed on that position, right? Demand just went poof, right? But we had to make sure that we maintained a level of composure and were able to manage both the physical supply chains, our financial positions, and then also take care of our people as best we could across the world as those things were going on.
Are there any lessons about life that you've learned from trading commodities? And I guess vice versa. Anything that you've learned in life, I guess a personal lesson that's made you a better commodities trader? I'm curious.
Yeah. The first ever podcast I did, which was like a year ago, I said to have your house in order, but it's it's more around like making sure you're super organized makes the way that you trade and manage your positions a lot easier because I feel like if you start the day with like a really good, analytical mindset and plan of what you're going to do, then whatever happens, right? A war breaks out, there's a tweet, big weather model change, whatever it is, I feel like you're better positioned to manage it if you already have like a plan in place and now you're more just in execution mode and you're not having to juggle a thousand things. And I think that bodes really well in life, at least in my life. I feel way better able to manage my life, my personal life, and my family when we're just organized. So, I mean, that's everything from like having a plan for what we're going to have for dinner to like having things where they belong in my house, which just sounds so simple. But I do think that it allows you to take on more and more and manage it with a clear head versus constantly operating in chaos. And I think it's very easy to slip into like responsive chaos mode versus like clear-headed organized mode. So that's probably my first thought that comes to my head. Um I talked about being delta neutral and being profit proof, which is not really, I mean, you could have, you could have a big vol position on and, be short gamma or something and still make money. But um this was also came from my conversation I was having with my husband last night because every once in a while he's just like talking to me through like, what he's thinking about and all these positions. And sometimes I'm like, I don't know what you're hoping for, but it sounds like you're profit proof, which is sort of like the look in the mirror that we can talk about. But I think from a personal life side of things too, I feel like if you it teaches you to like recognize that you need to take risks to sort of grow in life. I think as you take risks, um, or if you pick a horse, right? Like you've picked a direction and then you're just gonna go. You don't necessarily know what's gonna happen. And you learn that from trading, right? You put a position on not knowing what's gonna happen. You have a hope that you're gonna make money, right? You have a hope that you got the right position on, but you don't actually know what's gonna happen. And I think it's helpful to have that mindset in life that you can like make decisions with incomplete information or without knowing what's gonna happen at the end and being okay with it and moving forward. And if things don't turn out, you just pivot, you know? And then I would say, I mean, I've got so many. I asked my kids actually, what I bring from work into home, and they said lectures or lessons, which was terrible that's what they said, but more about like they said like, "Mom, you're always telling us like to be a good human. You're always telling us like how important it is to like have conversations with others and build relationships and how far that's going to get us in life. You're always telling us to like, be be bold, and it's okay if you're like thinking about things differently. And so, yeah, I mean, there's tons of crossover. And isn't that like a part of our how everybody is and why, everybody's unique in how they operate?
100%. And I think it's a wonderful lesson. I think what you said about having your house in order and keeping your physical space organized allows you to keep your mind organized to where I think things just flow a lot better. I mean, I can't speak from a commodities trader perspective, but I can absolutely speak from a personal perspective. When my room's messy, everything else tends to fall apart at the same time. So right now I'm looking around, just moved into this new apartment in New York, just had breakfast, rushing a little bit. And so, right after, I'm going to make sure I clean this and get everything in order. So thank you for that. My apartment's going to be significantly cleaner after after this podcast. I guess final question, just to wrap things up. You've been a commodities trader for, you worked at Cargill for, I think, 20 years. Um, there's so much change that's happening in the world. Um, and as a commodities trader, you thrive and you profit from uncertainty. You mentioned 2022. Um, and so I would love to hear it from you. You're a young person today. There's a lot of uncertainty. There's the risk of picking a career that might not be around in the next 10, 20, even 3 to 5 years. Um, how do we navigate this decision where we don't have all the information? Um, how do we navigate that, and how do we choose something that that will work for us?
I love this question. Um, well, first of all, I think that um, individuals in your generation, Ethan, are much better situated for what's going on in the world today than my generation, because you guys have grown up in a world of change at a rapid pace and forced adaptability. So COVID as an example, where literally everything you knew about your life was completely turned upside down and you had to adapt. And I think I am always so in awe with like my kids' use of all different technologies and apps, and I couldn't do half of what they do today, and like how they navigate like their homework on their iPads and all the different ways that they utilize tools. Like, I feel like the generation coming out is so used to adapting to change and new technologies, and all of the generative AI and things that are going to clearly, transform the way that we work and operate, right? You're coming into a workplace that, yeah, there's going to be some skill set, mismatches, because I grew up I grew up my early years before computers, so, like, that's just how old I am, and then, cell phones and computers really weren't a thing until I was, like, well into my high school years and into college, and so my skill sets are all around, like, the first use of, like, Excel and, office technologies, and I actually find it fascinating sometimes when, like, the new hires coming out of college come in and they, like, don't know how to use spreadsheets. But that's not really the technology probably for the future, but it's still definitely relevant today. So there's obviously gonna be like this skill set mismatch, and like your generation coming out and mixing with the new one. But I also think like there's all this fear of my generation of staying relevant and not maybe having the same type of skill set to adapt as quickly, because we're just not used to it, right? I think the changes happened a little bit more slowly. And so when it comes to like what career path to pick, or what does my future look like or whatnot, I first of all, I had no idea what I was going to do coming out of college. I said this on another podcast. I actually knew all the things I didn't want to do, and I just sort of fell into something, and then I found something that I really loved, and I just ran hard after it, and then I blinked and 20 years went past. And I think it was more because I was okay with the journey and the uncertainty, And I knew that, like, if I just kept, working hard, doing really good at my job, really trying to continue to have strong relationships and also being myself, which I am a contrarian. It's not always, you get I'm a very blunt person when it comes to my opinions. That doesn't always serve me well, but sometimes it does. But I think my advice is just be okay with the uncertainty, because at least in the trading world, whatever asset class you're in, there's a level of uncertainty. And if that's the area that you want to be in, if you're comfortable with it in your personal life, it probably bodes well for you. And so just be okay that you're not going to know everything. I don't even know where I'm going next in my career either. I know that I fell into doing some podcasts, and then I started my own consulting company. And now I'm also an external consultant for Bain. And if you asked me a year ago where my career was going to lead me, I would have had no idea. And I can't tell you where it's going to be in 5 years. And I think being comfortable and confident in that, at least has served me well. And so maybe worry less about where your career is going to be in 10 years, and just work towards some things that you love. That's not to say you shouldn't have big goals and dreams, because you should, absolutely should, but there isn't one path to achieve them.
Worry less and be comfortable in uncertainty and sprint at your goals. I think that's amazing advice. Thanks so much for doing this, Kristine. I had a great time. I learned a lot, and all the best. Good luck with everything.
Thanks, you too. Good luck with your schooling.